Hey, what's going on, you guys? I want to welcome you back to my channel. Hey, have you guys ever played a video game where you already knew how to play the video game, but somebody ended up giving you the cheat codes and it just gave you an unfair advantage into the game? How many of y'all remember the game Contra? Up, up, down, down, left, right, BA, select, start, get 30 men for 2 players. It pretty much gave you the advantage to pretty much beat the game. Or what about Mortal Kombat? The cheat codes and stuff like that. I can go on and on. You guys, in this particular video, I'm gonna give you guys the cheat code, the blueprint to being able to see insane clarity within the market, to be able to tell when you're supposed to be in the market and when you're not supposed to be in the market. How many times have you guys been in the market and been on the wrong side of the trend, wrong side of the trade? You thought it was going one way, but you were trading against the trend, things like that. Even though you really looked at it and you zoned in on it, you still end up catching that L or whatever the case may be. In this particular video, you guys, I'm going to show you and give you guys the cheat code on how you can enhance what you already know to see a different view within the market. It's going to be, I promise you, it's going to be like a cheat code to where your strike rate is gonna literally increase when you start implementing this cheat code that I'm about to give you guys. Hey, welcome to the Pips Academy. If this is your first time joining or this is your first time seeing one of our videos, let's get to it.
First we strategize, then we capitalize on what we see. Wanna go to Pitville? Come join the Pip Academy and learn the Pip drill. Let's take the trip to Pitville.
All right, you guys, so to start off, we're going to talk about time frame correlation and how the different times that we trade with works with the particular strategy that I'm going to show you guys. So for example, whether you're a swing trader or an intraday trader, a couple of terms and things that we like to look at. So for HTF, which is our high time frame, if you are a swing trader, you will be looking at either the day or the 4-hour time frame. If you are an intraday trader, like most of us are in the Pips Academy, you'll be looking at the 4-hour for your big picture. That's your narrative. What is the market trying to achieve? That's your high time frame analysis from there. When we're looking at our MTF, which is our medium time frame, for swing traders, that'll be your 1 hour. For intraday, that'll be your 15-minute. This is the time frame where you look for different biases to form your bias to the market within your big picture. This is where you look for your supply and demand zones, point of interests, imbalances, things like that. All of these things fulfills the HTF objective, okay? Now, when we're looking at the LTF, which is our lower time frame, this is set for executions and our entries. If you're a swing trader, you want to take your entries on a 15-minute time frame. But for most of us, we like to trade or take entries on the 5-minute or the 1-minute, which correlates with the MTF POIs. All right, you guys, so secondly, when we're looking at our MTF time frame, we want to look for, like I said, POIs. These are our supply or demand zones. These are our imbalances, things like that. This is the main time frame that we're going to form our bias and when we actually take our entry. So for example, as you guys can see on here, we had a couple lower highs, lower lows. We end up getting a break of structure. And then once price actually comes back into our demand zone here, our MTF area here, this is where we want to drop to the 1-minute or 5-minute to wait for that break of structure and retest to actually ride it up to our next area. For example, we want to ride price up to this area here. Once price come back into this area here, we want to drop to the 1-minute or the 5, wait for that break of structure, retest, and we want to ride price up to this area here. Okay, these are our targets that we target when we're actually trading on our MTF time frame. Okay, I hope that makes sense. So MTF is where we look for our POIs and biases. LTF is where we take our executions and entries. Okay, now let's go over to our higher time frame. All right, you guys, so looking at this particular chart, let's just say, for example, this is the 4-hour time frame. And so from here, we can see the market is bullish. We had a higher high, higher low, and another higher high, which actually broke this particular area here. So with this particular strategy or this cheat sheet, one of the things that we like to do, we like to play in the legs of the swings. So depending on where you are within the market will determine how the phases of this particular strategy will work. Okay, so now let's go ahead and plot on our 15-minute time frame, our MTF correlating with our HTF time frame. So for example, okay, let me take that off. So for example, as we can see, this is a 4-hour time frame, and we have, like we were saying, higher high, higher low, higher high. But in between this leg of structure, let's just say when price pulls back to give us a potential higher low to increase to the top, within this leg of structure, we have our MTF time frame that has highs and lows in itself. We have a lower low, lower high, lower low, lower high, so on and so forth, that plays within this leg of structure. So a lot of us are saying, okay, I already know that. You're not really showing me anything special. Okay, now check this out. We're going to go ahead and place on our phase boxes, which gives you pretty much the cheat code that I'm talking about. So let's just say, for example, you are in the market and the market decided to race away from this broken high here. At this point, most of us don't really know when to actually hop in the market, because the market, it retraces, it goes up, it does all type of things. Now, the first phase, or phase A of this particular strategy, it indicates that this here is high risk. So we want to avoid this until we get an MTF break of structure. Okay, so once we come up, and basically we want to wait for price to hit a supply zone or something like that, demand zone, depending on which direction you are going within the market. But once we get the first break of structure on our MTF, our 15-minute time frame, from there we can mark up that high as high risk, and then we search for a supply zone from this leg of structure that actually led to the break of this 15-minute time frame. Okay, this supply zone is known as our counter swing. This is in phase B. So counter swing is where we can play the MTF swing pullbacks, which correlates with our HTF time frame. Okay, so now this first pullback, when it comes into this area here, that's where we want to play the pullbacks. Okay, these pullbacks, we can play these down because this is our counter trend in our HTF. Counter trend here, because this is our pro swing here. Okay, so now within phase B, you can have multiple counter swings. Okay, but here's the kick. How do I know when the trend is going to change? Okay, so one thing that we want to constantly do, we want to stick to our strategy and how we trade. If you take it from the swing high and the swing low, we still want to use our Fibonacci tool. So once we start to enter into our golden zone in this area here, that's when we want to actually stay away from the market. Okay, because during this phase here, phase B, once price come up here, we can literally take entries here. Stop loss over the highs or over this area here, whichever one you want to decide. And we pretty much just play the weak swing highs off of the 15-minute or the MTF price action. Okay, price comes up here, we do the same thing. We take a short all the way down to the swing or the weak low. Okay, and that's what we do. Once we get to the golden zone, this is where the strategy suggests let's stay away. Let's stay away from the market until we get what is called a reversal. This is phase C. So this reversal, it ends phase B, and it lets you know we're starting to begin our pro swing phase. Pro swing is trading with the trend. Okay, so once we get down to this area here and we get that break of structure on the 15-minute, this lets us know, okay, you guys, now we're entering pro swing trade, pro swing phase, which is phase D, now we can trade with the trend. So in this particular phase, you can do one or two things. You can trade your MTF swing highs. And what I mean by that is price come down, you take an entry here, stop loss up under this price action, you ride price up to this swing high here, which is according to the MTF, or we can, depending on your psychology, we can ride price all the way up to this swing high of our HTF time frame. If you wanted to scale in, price come back, plan another one here, you can take an entry here, stop losses here. Now we can play either this swing here or we can play the swing high up here, okay? But each phase lets you know when you're in the market, okay? And that's how this cheat code works. So when you're in the market on the counter swing phase, you play the pullbacks, trade them on down. Once you hit the golden zone of your higher time frame, that indicates a reversal where you start entering into your pro swing and you trade up. Now, once you actually break your swing high, that's where we kind of start over again. We go all the way back to phase A. We're in high risk until we get that 15-minute break of structure. Okay, you guys? So now let's take a look at this in the live market and see how this actually looks on the charts. All right, you guys, so looking at EU, one of the things that we noticed on this particular pair is that we were initially in a bullish market. Higher high, higher low, higher high, okay? So now let's go ahead and put on all of our drawings. And let's look at the market as a whole. So initially, like we said, this here was our swing low in this area here, okay? Price came all the way up. And in this area here, it was high risk until we got a break of structure. This is phase A. Because what did price do? Price came up, gave a higher low, higher high. We don't necessarily want to mess with this particular area. Higher low, because this area here did not necessarily close a body candle under there. Give us another break, higher high, and then plummet down to a 15-minute break of structure. Okay, now, like I said, excuse me. Now, this is where we enter into our phase B, our counter swing phase. Now, more times than not, the first counter swing, like I said, you can have multiple counter swings within your strategy or within your leg of structure. So the first counter swing, sometimes it might, if you're not used to the strategy, sometimes you might want to bypass the first one to give you confirmation for the second one. But if you're used to the strategy, then you kind of play off those supply zones and things like that. Price come down, taps you in into this area here. We drop down to our lower time frame, 5 minute, 1 minute, things like that. Catch an entry, ride it all the way down to the weak swing low. Okay, in this area here, you know, we had two supply zones. We had one here and we had one here. Now, if we go back and we play price, let's play price from this point here. Now let's take it back a little bit further. That way you guys can understand my thought process and why I did not take this area. So let's drop it down to the 1 minute time frame. And so when price actually gets within our supply zones and things like that, we want to wait for a break of structure on a smaller time frame. So if we play price, we can see at this point, price came up, gave a higher high, higher low, and it broke this area, which pretty much took out this particular supply zone here. Okay, so now up in this supply zone, what did we see? Price came down right there. Price broke this area, gave us two body closures. Then we utilized this 5 minute supply zone here. Let me change this. This is 5 minute, or 1 minute, I'm sorry. Our 1 minute LTF, which was inside of this particular supply zone here. We set our entry there, stop loss over this particular supply zone, waited for price to come up, wick us in, and then it was off to the races. Okay, we dropped to the 15-minute, and we can see exactly how price actually played out with this particular trade. It never took us back in drawdown. Price came up a little bit, gave us a nice little retracement down to that swing low. Okay. So now with this particular strategy, as you can see, price came up, came down, gave us a 15-minute break of structure, and that put us into our pro swing phase, which price actually shot off. Now in this particular area, price never really came back to this area. So I didn't necessarily take any trades in this area. But as you can see, we marked off our demand zones and things like that. Price broke our swing high, which placed us back into our phase A, which is our high risk. We got a break of structure on a 15-minute. We end up targeting this area right here. Price came back, hit our MTF, and it dropped down again. And as you can see, it's almost recycle, rinse, repeat. However, with these particular boxes and strategies, it lets you know exactly where you are in the market at all times. So now this lets me know that we're in a counter swing phase. Okay, we didn't necessarily get any good pullbacks like I would like, but however, price came down. Now we have a break of structure on a 4-hour time frame. So this changes the game, which kind of almost puts us in a high risk perspective down here, because now we're waiting for price to pull back and then come back. So right now we're uncertain as to what is going on until we get another break of structure on a 15-minute time frame. Okay, however, the strategy suggests it lets you know exactly where you are in the market and how you can actually trade the market. It lets you know when to stay away from the market and things like that. Okay, so now you guys, let's go ahead and recap. All right, you guys, so going back to our diagram here, one of the things that I want you guys to take away from this particular video is the thought process and the idea of knowing when to be in the market. During your high risk areas, we want to stay away from the market until we get a break of structure on the MTF or the 15-minute time frame. That's when we enter into our swing phase, our counter swing phase, which is phase B. We can trade that, we can follow those pullbacks all the way down till we enter into our golden zone of our 4-hour time frame, our bigger time frame. Once we get to that particular area, we want to kind of be patient until we get that reversal, because price can easily come up, come down, give us a break of structure and blast through it. So we want to be patient until we get that reversal, that break of structure on a 15-minute retest, and it blasts away, entering us into our phase D, which is our pro swing phase. We trade with the trend, we follow the pullbacks, and then from there, once our high or weak low, depending on the direction, is broken, that's when we enter back in our high risk phase, and we rinse, recycle, and repeat. Hey you guys, I want to thank you for rocking with me. I hope this video was informative. I hope this increased your strike rate. Please subscribe if this is your first time, that way you can see videos like this. And hey you guys, I'll see you guys on the next video.
First we strategize, then we capitalize on what we see. Wanna go to Pittville, come join the Pip Academy and learn the Pip drill. Let's take the trip to Pittville.